Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Lynn & Associates with your agriculture update for this Friday, the 7th of April, 2017, about 3:50 in the afternoon as I'm putting this out. So we have an interesting day in the grains. The markets came down. The bean market is still trying to find its footing. There's been a lot of talk that the May beans might be going down towards the $9 mark overall, that the corn market might just be stuck here in the 360s for a bit as well. Don't know if there's any truth to that or not, but I'm telling you what I'm hearing from a lot of people is, remember I'm in the Board of Trade where the grain trade is, and that's what we're hearing. Here's what I can tell you as a chartist. You had the sideways action that I've pointed out for a long time if you're a regular viewer of these parts. And here's what you looked like. I said, you're narrowing in. The question is, which way does it break out? It broke out last week under here, and it's following through this week. That's what you can say about it. It's not uncommon if you get a rally or two to try to challenge back into the apex, but it takes an awful lot to change the pattern. When we look at the pattern of closes only on the weekly chart, you've gone from 1080 to 942 this week. So you've dropped $1.38 in no time at all. This occurred in January. So this market has lost approximately 10% very, very quickly. As we take a look at the weekly chart of the bar chart, just now we're going to look from high to low. The low is about 6 cents more than where the close was. You see that? That's the 42 settlement price, and this is the actual low. When we take a look at the swing line study, which helps you to determine, number one, is the market trending? Number two, what's the risk associated with the trend? It becomes clear that you have lower highs marked by the red arrows, and that each break low is taking out the previous apex. In order to turn the trend up on this particular formation, you'd have to get over 1008 3/4, so you'd have to hit 1009. That's a big number to have to get up and over. The market has now got 2 weeks under a row of the 100-week moving average of closes. Now, the first challenge is often you have to decide, are they going to carry or are they going to snap back a little bit on it? In this particular case, we're waiting to see, but resistance will be waiting for the market at that number, is my opinion, is on the chart. What about where the market might head down to? It's already done it. It's riding the lower Bollinger Band, which is very bearish. Now, when you come back to these patterns, which were trying that, they weren't doing it. They were far away from it. That changes what's going on, because when that occurs, if you get the slow stochastic staying under 20 and just continuing to point down, that adds fuel to the fire. So I'm rating this a very bearish chart at this point. In the meal market, you're oversold on the longer term chart. The trend is clearly lower highs, lower lows. Like the soybeans, you have 2 weeks under the 100-week average, but it's not riding the Bollinger Band. So at any point, it could get a bounce in it, is the difference. The beans are weaker looking, and the soybean oil, well, it's in the parade, but it's got what we call that embedded reading, and it's just a bearish chart. Not quite as bearish, believe it or not, even with the embedded reading, as the soybeans, because they just ride that lower Bollinger Band. And until they pull away from it, you don't get much of a correction. In the corn market, this is about as sideways as you can get. I know they were talking in our office this morning that a lot of people were selling straddles because they don't think there's going to be a lot of volatility. I admit I'm not an options guy. I like the futures straight out, buy or sell, and I'm right or I'm wrong. I always find that adding another layer to it, it's wonderful for some people. It just confuses me because I'll say, gee, I'm right direction in the market, but volatility or time or something took away my profit. I want to play it the other way. So in looking at the chart, you got higher lows, but you got lower highs. Not a very pretty chart. So we know this week 371 3/4, and on this high was 370 and 3/4. That's why you have the higher highs. Do you see that? I know it doesn't look like it sometimes on the chart, but I did check it. Take out 354 and 1/4 and you break that pattern. But because you got a higher high and then you'd have a lower low, you're still not trending. I think you're stuck in this narrow Bollinger Band, and that could be why I'm hearing those words, straddles, coming out. Probably the same thing in the wheat market. Notice how wheat just seems to be caught right now at that 18-week moving average of closes. So for those that are playing this, you don't want to be on that average itself, because it sometimes offers on a weekly chart a lot of support or resistance, depending if you're coming back up to it or falling back down to it. Momentum is still pointing down, so it favors the bear side. The cocoa market on the daily charts collapsed today, and it was just a terrible, terrible day if you were looking at it. Now, the swing line has been up with higher lows, higher highs, but you're unable to stay above that 18-week moving average of closes. That's your big resistance point. And now, while momentum had been pointing up, and you can see that right through here, it hit that number, started running out of the momentum, and now it's about to turn down. This market's got some problems. It's certainly not acting bullish at this point. It has to be over the 18-week average to be bullish. The sugar finally hits the 100-week average. This was last week, this is this week, and it's trying to hold. That's all that you can say. It's a bearish chart. It's riding the lower Bollinger Band. It is oversold, but remember, I don't use the slow stochastics on weekly charts the way I do on daily. Daily, it's a different game. In this one, I just watch as it pointing up or down to get a feel for what it is, and it's got still a lot of bearishness about it. Hit its first major number. A lot of traders look at the 100-week moving average of closes, and it found some support against it. In the coffee market, the daily chart negated today the downtrend, but when we look at this chart, you have no trend at all. You've got a higher high, a lower low, and you rallied back up, and now you're again challenging this week the 18-week moving average of closes, and momentum's not pointing any which way. It's just sort of stuck right here. In the cotton market, the bear camp is taken over, lock, stock, and barrel. Why? Lower highs, outside week down, under the 18-week moving average, and momentum solidly pointing down. So until this week's high is taken out, I think the bears grabbed control away from the bulls in this market and ended it in a very swift fashion. In the cattle market, notice where this market on breaks continues to hold, this 18-week moving average of closes. It's a difficult chart. You're refusing to stay under the 18-week average. There's a big fight going on right now between the meat packers and the feeders. And the feeders want more money. The packers don't want to pay it. Somebody's going to blink. If the packers pay up, there's a lot left in this market. If they don't pay up, the question is what happens? How long can the feeder keep holding out? It's a big battle, and we've been covering it in our information. I'm going to get to that for you in a second, because this is the stuff you want to read about. It's not the stuff you're going to find in the Wall Street Journal. Okay? You need a commodity firm to talk about these things, and that's exactly what Lynn Research is about. You got the higher high, the lower low, and the hogs. This is a market that's got downside bias, but it's also getting into oversold territory, but momentum's pointing down, and as much as the 18-week average was coming up, it looks as though it might have enough here to start turning back down. Could the market get all the way down to the lower Bollinger Band? Well, it might. Notice something else. The market peaked out here as it hit that upper Bollinger Band, and even when it went higher, it couldn't get back to it. So the question is how much is left on the downside, and that's a tool I use. Here, as much as you were falling, you couldn't hit that number, and when you finally lost that embedded reading, it was a big sign. Here you're oversold. When you lose the oversold, you probably get a rally back. So as I said, Lynn Research. The company I'm with, Lynn & Associates, is well known in the grain, the meat markets, sugar, the softs. I cover for the firm in a lot of detail the financial markets, the gold markets, the silver, the copper. You know, if you watch me, I think you know I know my way around those markets, might be the way to say it. I wish I could say I win on every trade. That doesn't happen. But I also don't lose on every one, so I can balance the statement in terms of trade recommendations. All right, so all of these different categories we write on. Some of you don't want anything to do with currencies. You just want to watch that meat market. It's right there. You click that off, and our research will show you for the next couple of weeks what we give to our commercial accounts, our hedgers, and our spec accounts. You get a real mouthful. You're going to see information, especially if you're an options trader, that should blow you away, because we have our own people in the pits making markets down there. And yes, there are still the pits and the meat markets for the options. And they're doing it, and then they come up and write about who did what, where it's all at. So how do you get this? You give us a call at 866-973-207, or you can go to our website at www.iraepstein.com. When you click it, you'll see Lynn Research. It's our carousel of free offers. Click it off. You can also click right here if you'd like at any point. If you're seeing me on a YouTube video, just click that, and you'll see a form will appear. Pick what you want. There's other offerings as well. We'll get things in your hand. This is a limited trial. You have to have a trading account or buy my research to get it the rest of the way. I'm Ira Epstein. You have a great weekend. Look forward to seeing you on Monday. Take care now.